Hey everyone, it is Jay Soloff, and this is our options trade of the week. So we are at marketchameleon.com, and I am looking at VXX. So VXX is the short-term volatility ETF. It's used very frequently for speculators to trade the direction of volatility, or for hedgers to hedge against volatility. It's quite popular, so seeing some of the big trades in there can give you an idea of what maybe some institutional money might be doing to position for or against volatility. So I like to look at, particularly towards the end of the week, I like to see what some of the big trades have been, how maybe some of these institutions or big traders are positioning for the coming week. Just to give you an idea of its popularity, you can see that the 90-day average of the ETF is over 35 million, which is quite a bit. Options are probably more impressive, almost 250,000 on average. Today there was over 400,000, so quite a bit of activity. So let us take a look and see what maybe some of the big trades were. So if we go to this trades screen here, we can see a list of trades. And then what I usually like to do is sort it by quantity, because it gives you an idea of what the biggest trades were. So yeah, here you can see a couple big December trades. So what this looks like here is whenever you see a 2x1, whenever you see a double, if they're done at the same time, so you know it's a spread. If there's one that's double the other, it's usually a ratio spread. They're usually done with puts. So in this case, it looks like with the stock at 1760, someone bought the December 20th 16 puts, so about $1.50 lower, and then they sold 2 of the 15 puts. So why would you do that? Well, if you sell 2 of these for 19, that's 38 cents. If you bought this one for 51, that means they only spent 13 cents on this trade. It starts to make money as it approaches 16. As you get to expiration, the break even is just under 16, but you can make money all the way up to 15, where you could make almost, after the premium cost, almost 90 cents on the trade. So what's going on here is that someone suspects that 15 is not going to be a level that's breached by December in VXX. That would be an extremely low volatility, and this person is probably assuming that we're nearing a bottom in VXX. It's been going basically straight down in recent days, so this is a way to kind of profit off that, but not spend a whole lot to do so. Now, this is an institutional type trade. I highly recommend to not do put ratios like this, where you're double the one that has unlimited downside. Well, not unlimited; it can only go down to 0, right? And even if it's volatility, it can't go much lower than where it is. Realistically, I mean, maybe 10, maybe 11, assuming there was no reverse split. But even so, that's still a lot of risk to take, and I don't recommend it. If you want to do just a straight put spread, that's what you should do, so you don't have that risk of the extra short put there. So just to put that into perspective here, as this chart loads, let's look at like a 6-month chart. You can see the action has been almost straight down here. Now again, to go all the way below 15 is not likely, but it's possible. So you don't want to take that kind of risk. It's easy enough just to do some kind of straight put spread. Like if you go to the December 20th, so we were looking at the 16.15. Well, you can just do you could do the 16.15 just straight up. It still won't cost you that much. You could do the 17.16. You could do the 17.15 if you want to spend a little bit more money, but since you're probably not going to be doing 20,000 of these, you don't need to lower the cost all the way to 13 cents. You could spend 50 cents on something, $50 a spread, and take all that risk off the table. So that's the sort of thing you're interested in. Not a bad way to play dropping volatility through the end of the year. So if you're interested in learning more about options and volatility and this sort of trading, you can check out my beginner level or entry level service called Option Floor Trader Pro. It's a good way to kind of get your feet wet and learn more concepts and just different sorts of trades to start with if you're relatively new to options, or even if you just need a refresher. It's only $49 a year, so not a lot of risk to try it out. There should be a link on this page, so check it out if you get the chance.